Good afternoon, everyone. It's 12 noon on the 3rd of September, and I'm not sure whether you all got the memo, but our Minister of Cooperative Governance and Traditional Affairs has declared that spring will only be available on level 1. Seriously, though, we are metaphorically talking about spring in South Africa and what it will take to encourage the green shoots of economic growth while avoiding the icy blasts of a financial and fiscal crisis. We know the facts. We know that the COVID-19 pandemic and lockdown has resulted in a really dramatic contraction to our already crumbling economy, along with most other economies in the world, I might add. We know that COVID-19 has cost this country about 3 million jobs and countless livelihoods. And we know that the already very narrow tax base, which supports government expenditure, is contracting along with the economy. And to top it off, we know that the country is facing a fiscal crisis that is far, far worse than the nightmare that the ANC inherited in 1994. What we don't know is how bad it can get. South Africa's deterioration hasn't come all of a sudden. The deterioration in growth has been a long time coming. In 2006, we were chugging along at 5.5%. That fell to 3% in 2008 and has fallen ever since. Many of our challenges are now structural rather than cyclical. So what actually will it take to turn the ship around? So to help us unpack our twin problems of debt and economic stagnation, we have the pleasure of spending the next hour with Nazmeera Moola, Deputy MD at 91 South Africa and Head of South Africa Investments, and Mamokete Lijane, Fixed Income Sales Trader and Macro Strategist at ABSA Capital, who are going to be sharing their thoughts on these issues. But before we jump into the topic at hand, let me welcome you, our Maverick insiders, without whom this webinar and possibly my job would not be possible. And I invite you to put your questions onto the panel alongside the screen on your right-hand side there. And I will do my level best to get Naz and Mamokete to answer them. So let's start now with the subject of debt. South Africa's debt levels have surged in the face of the COVID-19 economic collapse. Mamokete, let's dive in with the controversial subject of the 70 billion rand IMF loan. Did we have a choice, really? And is this the slippery slope to IMF dependency?
Yeah, I mean, I think on the thing about choices, my answer is always that there are choices. There's always a choice. You've got other choices, other decisions that you can make. But whether this was the best decision in the current context, I would probably argue yes. So if you remember, this particular kind of loan from the IMF is very conditionality light. So unlike a structural adjustment program, there isn't really conditions around, policy, etc., that would be deemed to be eroding to some extent. I suppose that's the right word. Your policy sovereignty. So to my mind, this was the right decision to the extent that it's very cheap money at a time when we really, really needed it. And by virtue of having gotten this money, we have been able or will be able to do more than what we would have done without it. And it really didn't come with any harsh or arduous conditions. So whether this is a slippery slope to the IMF, I'm always intrigued by the conversations around the IMF because people always make it sound like your worst place is the IMF. The IMF is not your worst place. Your worst place is before the IMF, actually. So essentially, the IMF is not a destination where once you're there, you've gone over the hill. You go over the hill, and then you go to the IMF. And I think it's an important distinction to make. So we don't demonize the IMF within our political economy, and we can say the IMF is not your problem. Your problem lies elsewhere. And maybe if you can then start to deal with the problems that get you to the point at which you need the IMF. It's an important distinction, even though I think it's not sufficiently appreciated. So I suppose what I'm trying to say here is there's a lot you can do before you get to a place where you have funding distress. So, you know, and the slippery slope, you know, arguably you've sort of like been seeing a deterioration in fiscal metrics, the dynamics for very many years. So this idea that, you know, this is now the slippery slope, it's, yeah, so that kind of language, I think, it really makes it difficult to have a proper discussion around what we need to do. I don't know if that makes sense. Yeah.
It absolutely does. And in fact, my colleagues, Tim Cohen and Ed Stoddard, wrote an interesting article the other day where they were discussing debt, and they made the point that not all debt is bad. Some debt is healthy, it promotes growth, and the rider to that is obviously it's that debt that can be paid off. And we know that this government, post-94, did a fantastic job in bringing our debt under control. And that actually changed after the global financial crisis, when the country adopted a very expansionary macroeconomic policy. And the fiscal deficits have been large, and public debt in that time has actually tripled. So we certainly haven't been following a policy of austerity. So before we talk too much about policy and the economy, I wonder, Nazmeera, if you could talk about the implications of our failure to arrest our debt, because let's not talk about a slippery slope to the IMF, but perhaps that point, as you said, Mamokete, just before. What happens if we don't arrest debt?
Well, Sasha, I think if we look at the last 12 years, it's called 12 years post the GFC. We started in 2008 with a debt to GDP ratio of 23% of GDP. We were one of the lowest in the world. So massive improvement from 1994. We then have a situation where at that point, it seemed to make sense to have a more expansionary policy. But the problem is the composition of the spending was completely wrong. Instead of spending the money on infrastructure, we spent the money on public sector wage increases, which caused a fantastic consumer spending boom through 2013, 2014. We know when the retailers all felt very good, but it didn't create any growth to pay off the debt in the future. And then the extra money on top of that was borrowed in the state-owned entities like Eskom and Transnet was also largely badly spent. So that even there, you don't have assets that are producing income at this point in time. So I think that combination is where we are. We borrowed, we spent it on consumption in the government, we borrowed in the parastatals, and instead of producing productive infrastructure, we produced largely unproductive infrastructure. So now we're left with a large debt burden. And on top of this, we ended up with COVID. So we're at a point where in 2008, about 5% of government spending went into interest payments. We now at 12, 13%, and it's heading to 22% on the active scenario. The best case scenario, we're going to head above 20% of expenditure being used to make debt payments, interest payments, over the course of the next couple of years. On a bad scenario, you end up at 1/3. And that's the situation we need to turn around.
So we know that other countries are spending their way out of this, out of trouble, really. Fiscal stimulus measures as a share of GDP reached an impressive 21% in Japan, 12% in the US, 11% in China even, 8.5% in Saudi Arabia and India. So can South Africa afford to spend its way out of trouble? Naz, what you're saying suggests possibly not, but I'd love to hear both of your views on this. Let's start with your views, Mamokete, and then perhaps move over. Nazmeera, I think it's an important point. I'd love to know, can we spend our way out of trouble?
I think we've managed not to spend our way out of trouble. If you look at the amount of the fiscal response that we've had into COVID, into this crisis, it's been modest, and that's when somebody's trying to be very generous. And the modesty of the response is a function of our fiscal state pre-COVID, right? So and this is the thing that was highlighted in the period before, that if you get into trouble, if you hit a crisis, you won't have the fiscal space or the policy space to respond, and that's where we are already. So I think what we need to accept is that already we can't respond to this crisis. We know that the measures that have been put in place are due to be withdrawn, or at least, the social security measures will expire in the next month or so. Our ability to continue to support this economy and vulnerable people into next year is non-existent. If the crisis hits our economy any harder than what we think, it's going to be very difficult to have a fiscal response to that. We've seen something happening on the monetary side, but on the fiscal side, it's been very, very limited compared to where we were pre-crisis, or at least our forecast pre-crisis. So what we need to worry about now, essentially, is what happens when we get to the next downturn. So we're in the middle of a downturn. We have no fiscal space. What countries would typically do is they would use the policy space they have to support their economies, build up the space when you're in recovery, and use it again in a downturn. At this point, it's not even clear that we're going to have any space at all in a downturn, especially if the sort of like the active scenario that government put on the table doesn't pan out. And I mean, like, the jury is very much out on whether we'll be able to deliver that or not. So my thing would be, it's not even, we can't respond. We can't afford to. We struggling to borrow. I mean, our borrowing rates are so high now, so we're struggling to borrow in order to support the measures that are currently in place, which I would think are not necessarily adequate. So yeah, I'm with you on that one. We don't have the policy space to respond, and it's only going to get tighter going forward. And in this crisis, we need to worry about the next downturn.
Sure. Yes, do you want to add? Yeah,
I'll add some detail, but I think the view is very much aligned to what Mamokete said. And I think the 2 points I'd add is, one, we have not spent a great deal more, but we're still going to have one of the largest budget deficits in the world this year. And that tells you the position we came into this crisis in. So we're going to run a budget deficit this year that looks like 14-15% of GDP. When the other numbers you quoted, they were starting from 1 or 2 or 3%. So you add 3 plus 11, you get to where we are now. We were starting from 8.5 plus the tax shortfall. So that's the one issue. The second problem is spending is useful when you have pipes that can efficiently disperse the money. So therefore, the social welfare grants, I think, are the best piece of spending we did. The PPE has been atrocious, and it just highlights the inability of government to actually disperse money efficiently and honestly. And that's why I am very averse to any program that involves some massive increase in spending. One, I don't think we can fund it. Foreigners have been net sellers of the bond market this year. So all of the issuance has been taken up by local banks and local asset managers. There is no room to issue more into the market. So I don't know where the money would come from. And secondly, if we could raise the money, I have a very high degree of concern it would be wasted.
Sure. So we know that the brains at National Treasury are busy working at the moment, preparing our medium-term budget policy statement, which is usually presented, I assume it's going to be presented in October as usual. And this sets out government's thinking on our macroeconomic and fiscal responses for the next 3 to 5 years. And what you're saying is there's no room for fiscal expansion. But at the same time, any attempt to introduce austerity measures is going to be extremely unpopular with much of government, even though National Treasury, represents government. We know it's not going to go down well. It's going to be unpopular with the alliance partners. It's going to be unpopular with civic organizations. So we also know that if COVID's done anything, it's actually galvanized all of these organizations, civil society, business, trade unions, to actually engage with one another, to engage with policymakers on alternatives, which perhaps respond to some of the socio-economic challenges confronting this country. And like, is there any wiggle room, Naz? You're saying there isn't, but is there another way of framing this? Is there another way of looking at it beyond just tightening our belts? Because sure, that's a tough one to swallow.
The solution is growth. The solution is government executing on reforms that get construction of the renewable energy program going, that actually get infrastructure going, spectrum auction, visa resolution. It's actually, that's the solution, Sasha. Because the fiscal side, I mean, let's put into perspective what Tito Mboweni is proposing in the supplementary budget, which I expect to largely, I mean, I'd be interested to hear Mamokete's views, but I largely expect to be carried through to October. He's not proposing massive cuts in the amount of spending we're currently spending. He's proposing we keep the budget flat. So no increases in wages, no automatic increases in wages, no automatic increases in budgets. That's what the numbers involve. So we talk about saving 390 billion rand. It's off the projections. It's not off what we're currently spending. And let me leave you with one more statistic. In this current financial year, the year that ends 31st March 2021, 60% of tax revenues will go to support the wages of 2.5% of the people.
Tell us that statistic again.
60% of tax revenues are used for public sector wages. Public servants comprise 2.5% of the population. If we want to spend money on social welfare grants, I did a rough calculation on the basic income grant. 10 million people, this awfully low number of 350 rands a month, but for the sake of the calculation, that was the number I used. And you can fund that with a 7% cut to public sector wages.
That's not going to go down very well.
No, but how many private sector workers have taken 7% cuts in this environment? So we as the country have resources. We just need to think about how we are channeling them.
Mamokete, do you have a view on whether Tito will hold his line in the mini budget coming up in October? I know I shouldn't use that term, mini budget, but the medium-term statement.
I think policy making and actually choices, like all of us make choices in our own homes, in companies, in countries, in societies, and they involve trade-offs. And the fact that certain vested interests have a particular position does not mean that that position actually is the right one for an entire country. So I suppose what I'm trying to say here is that Labour might have a particular view that suits their interests. Their interests are not necessarily the interests of a poor person who doesn't have a job at all, or a low-paid worker who needs government services, or a business, or you and I. And I think, we need to somehow try and balance the interests in the economy. And accept that somebody can have a different view, and it's a legitimate view from their perspective. But we need to make choices that sort of balance the outcomes for everyone. So I suppose what I'm saying here is, if you, as Naz say, if you continue to pay public sector employees a nominal increase in wages, we're not even talking about real increases. Say you just match them on inflation. You increase their pay by 3%. What are the implications for your ability to deliver support for the rest of the economy? And if you're looking at an economy that might end up with 3 million jobs lost, I mean, that's another forecast. I think it's far too bearish, but you're dealing with unemployment going up to somewhere in the 30s, late 30s, and you're dealing with unofficial unemployment like inching closer to 50%. That is an untenable situation. Those people have also got to be provided for. So essentially, I'm saying it's difficult for me to see how Labour can have a moral, or can make a moral argument, an equitable argument in this environment for further wage increases, especially when every other worker in the economy that is not state employee is expecting nothing and sees it as reasonable. And at this point in time, most people are happy just to keep their jobs. I'm not saying it's right, but that's what it is. So why should we, as a society, privilege one cohort over another? And I think these are the kind of discussions that we need to have around what the payoffs are and what the trade-offs are, and who's paying for what. So I agree that the policy discussions have become quite heated, but I also think it's not necessarily the case, for instance, that the public sector worker interests are aligned with the average South African's interests in this instance, and that's where the discussion, I think, should go.
I think at this point I would like to bring in some of our audience who the chat panel is going crazy here on the right, and I don't want to squash them all into the last 5 minutes. So Peter and Leon and Brian and Nzimasi, we see you. I'm going to try and I'll start with Peter Southey, who I think he's making a comment here. He talks about long-term prosperity has to come from the bottom up. And if the bottom up doesn't develop the know-how to create wealth, then are we doomed to a slippery slope? And I think what he's saying or asking is we have to be inclusive as an economy. And how do we include the bottom part of our population who perhaps are ill-equipped, ill-educated to compete in an economy that is contracting? I don't know if you have a view. How do we bring them in? How do we include them? Is it a case of just including or expanding social grants? It's not that easy. Naz, do you have a view on that?
I think in the long run, education is vital for a country. I think it determines the potential growth of the country. So our major failure as a country since 1994 has been the education system.
Yeah.
I mean, the government inherited an education system that was inherently set up to subjugate Black people, and their mechanisms to undo this have been suboptimal. And unfortunately, that is the long run solution. What I'm hopeful about, and it kind of goes back to the previous discussion, part of the solution has to be the teachers. And part of it's upskilling teachers, but part of it is using all this new technology that has just become so much more accessible during COVID, much more smartly. So I think that has to be part of the longer run solution. I think in the shorter run, I would hope that government starts to work with companies to figure out how these job support programs can be used more efficiently. And what's upsetting to me is that historically unions have been quite averse to that. Whereas when the Treasury implemented the, I can't remember the name of the program a couple of years ago, they had quite good uptake.
That wage relief.
The youth wage subsidy thing.
Yeah. Exactly that one. And they had good take up, and you had lots of first-time job entrants, first jobs, getting jobs on the back of that. And that's what we need. We need people to get into the labor market, because that unemployment rate of 14 to 30 is above 50% currently.
Yeah, I've got a question here from Leon Meyerberg, and seeing as we're talking about debt, and the comment about there's good debt and there's bad debt, if the country is going to take on more debt, then one assumes it should be used for growth enhancing investment. But that statistic that you just quoted a second ago, Nazmeera, that in terms of what we're spending on government wages, this is a debt that is going to accrue to our children. How can we stimulate growth? How can we use debt correctly for a start? I mean, how can we channel it in the right way? And Mamokete, maybe you want to tackle this, because debt is there, and it's a question of how we use that debt, isn't it?
It's always So it's a very simple and clear answer, right? Best use of debt: you take the debt, you build a power station, you produce electricity. The power station is there for 30 years. In year 10, it's paid itself back. From year 10 to year 20, or year 10 to year 30, the next 20 years is just happily producing electricity. That's the best sort of outcome, right? The math is clear, and I mean, it's obvious. It's like, it's not that complicated, right? But when you borrow money, you buy a power station, and then the power station doesn't work, then that money can't, that power station, the generation can't pay itself back. I mean, that's the one where you have done the right thing. You've borrowed to invest in infrastructure, but it's poorly designed, beset by all sorts of challenges, governance, et cetera, and therefore the infrastructure that you put down is not functional, and therefore cannot produce you a return. Then there's this idea of, like, you borrow money, you invest in teachers. In teachers, maybe it's not a bad investment, because it is like investment in the future. Then there's, you borrow money and you're paying everybody like massive increases in real terms that outstrip the economy, and its current expenditure, it goes into a hole. That is bad expenditure. Never mind when you borrow money and you're paying social grants. So somewhere, somehow, you need to balance the expenditure that is supported by debt, so that becomes infrastructure capital investment, and expenditure that is via revenue has to be, maybe you manage to, your current expenditure comes from there. So that would be the perfect model. But we know that, like, world doesn't work perfectly. Things can be out of balance. But when you're out of balance for an extended period of time, then you have the kind of problems that we're currently sitting with. So obviously, I think when budgets are conceived initially, they're conceived with the best of intentions. If you look at anything that National Treasury puts out, what they say, they put out budgets with the best of intentions. But one point that has been made, I think, by Michael Sachs over and over again, is that you set policy one way when in the Treasury, and the rest of government operates in another way. So, Treasury can say, oh, this is allocated for current expenditure, but it hits a department and it does something else, and Treasury has no way of like pulling that money back. So essentially, policy as a whole is out of whack, and that's really a coordination failure, I think, more than it is a technocratic failure on our part. So, those are the kinds of things we need to solve. Essentially, when you look at them, they look like small things, but I suppose the point I'm trying to make is that we know what to do, and we can do it. We just need the political will to make sure that government works in a way that is consistent with proper fiscal management and proper macroeconomic management in general.
So Mzimasi is asking you guys to tread where angels fear to go. And he wants to know, taking political considerations into account, what is your impression on the outcomes of the ruling party's meeting over the weekend? And I'm not sure who's brave enough to go first. Naz, let's start with you, because you have the broadest smile. So and
we were talking
we
about the economy, Sasha. When did we get round to talking about politics?
I know.
I think what is net positive is the ANC has put in place a framework for dealing with individuals charged with corruption. And it's a pretty transparent framework. And that's more than we've seen before, where it's promises of fighting corruption, but there's no consequences, because, people charged stay in their positions. I mean, I think the only time they ever gave it up was what was really. So now this needs to be tested. So we've seen 3 people resign between Friday and the weekend on the basis of this. But what we would hope for is that a lot more people that have been involved with corruption are charged, and this framework is tested and is shown to be functional. And I think the jury is still out on the second one.
Okay, well, let's move from politics back onto safer territory, and we've already, Naz, you've already suggested that as a government we're not all on the same page, and I mean that's as a government, as a country, we're not all on the same page, and therefore we're not all pulling in the same direction. So let's go to the SARB, which is another area of controversy. But the SARB has stuck religiously to its policy of inflation targeting. And we saw a seismic event happen in the last week where the US Federal Reserve said it's dropping its focus on inflation in favor of maximum employment. Now this will be music to the ears of many in sort of on the liberal left in South Africa. SARB's inflation target has been 3 to 6%, and we've been comfortably in that for some time, not for the right reasons. It's largely because the economy is so sad. And we know that our governor, Lesetja Kganyago, repeatedly says that the bank isn't going to stray from this mandate. He is terrified of giving into populist ideology, which suggests that there's something called magic money, and we can fire up the printing presses, and says that this is definitely not the time to venture into policies and instruments that have proved to be a failure. And I think our friends on our northern boundary speak to that. But Mamokete, will the actions of the US Fed perhaps influence SARB's thinking? I mean, it's the biggest Federal Reserve, it's the most influential bank in the, government bank in the world. So we can't ignore what's happening there. What's your view on those changes?
So I think the issue of central bank mandates globally has been a live one pretty much since 2008, and the post-crisis actions across the ECB, the Fed, and we know what Japan had been doing prior to that. So there's a constant discussion around central bank mandates that obviously the SARB is also part of. But I think when you look at the actions of the Fed and they're removing the inflation target, I mean, the Fed hasn't managed to hit 2%, and their inflation has been below 2% for the longest time. They have struggled to get inflation back to their target because they were permanently under the inflation target. So they're dealing you're dealing with a very different environment with respect to the US versus what we've seen in South Africa, where South Africa, we had a 3 to 6 target. We've sort of like been within the target for the past 2 to 3 years. But the sense within this context is still that the bigger threat is inflation versus it being disinflation necessarily. So, I think, the SARB will obviously take note, but the risks that the South African economy sits with are not the same as the risks that the US economy sits with. And DM in general, which has got far more structurally disinflationary factors that we inherit some of, but we still have, our problem is probably still going to be, or in our minds, the thing that we need to be guarding against until we've been proven otherwise is probably still going to be inflation. So I don't see a situation where the SARB in the short term or the near term or the medium term even shifts and says, oh, we're no longer targeting inflation, we're going to be targeting employment or another indicator. I don't see it, and I also don't think it would be the right thing, because in our context, if you had a situation where the SARB tomorrow said we're no longer targeting inflation, I think the ramifications of that, or the consequences of that on borrowing costs in this economy would be very, very negative. So, while you're looking at it and saying, well, this is what the Fed is doing, you take note, you see what happens over time. It's not the kind of, policy shift that I think would fly in South Africa at the moment, and I don't think it would be appropriate. And I also think, if you think about South Africa and you think about the US, it's not the same. We're not talking about the same sorts of economies. And I think that should also that sort of messaging needs to be brought to bear as well when we start to talk about quantitative easing, monetary finance, etc. That we're not the same. This is not the EU. It's not Japan. It is not the US. This is an emerging market country, small, that relies heavily on external financing, for which monetary policy stability is extremely important. And we have to be guard against being too aggressive on that side, because we don't have the space to take the policy risk.
Just in looking forwards, perhaps I can ask a backward-looking question. So at the beginning of this conversation, Nazmeera, I said that our National Treasury has actually pursued a macroeconomic policy that is expansionary. And we did invest and we did rack up debt, but we didn't see the results. We didn't see the results in GDP growth, which is what people are arguing for. They want us to invest. They want National Treasury. They want government. The economists want government to pursue an expansionary policy with the presumed outcome that growth is at the end of it. But we haven't seen that. Do you want to just reflect for a moment or two on why we haven't and how that can inform decision making where we sit now? Naz, do you want to kick off?
Sure. So I think part of the reason for that lack of a pickup in growth was the composition of the spending. So you did see benefits. You saw benefits on the consumption side. The issue was on the investment side, you saw the reverse. And I think the reason for that was the regulatory uncertainty. Regulatory uncertainty coupled with then political interference in a lot of the investment infrastructure projects, whether that was in the mining sector, where you saw very arbitrary application of policy around many of the areas of regulation there, but also the shortage of electricity. And as a result of that, what we saw between 2013 and 2014 and 2017 was a contraction in private sector fixed investment. And that was the first contraction in private sector fixed investment that happened in South Africa post-1994 in the absence of a global financial crisis. So if you track back to 1980, there was a contraction in the early 80s driven by the collapse in the gold and commodity prices. And there was one in the mid 80s, which was the Rubicon speech. And then there was one in the early 90s, which was the political uncertainty in our transition to democracy. But post that, you had 98, which was Asian crisis, and you had GFC in 2008. You then have this contraction in the 2013-2014 onwards period, and it hasn't really gone away. There's been little moments where it's ticked up, but we've had private sector fixed investment contracting in South Africa for the last 6 years. And it's how do you reverse that? That is the solution in South Africa. And I think confidence and expectations are so low that I keep coming back to government needs to pick three things. One of them needs to be Eskom and electricity, and I don't mind what the other two are. I would propose spectrum auction and something around the infrastructure on the container terminal side, but I don't mind what those are, and execute them in the next 6 to 9 months. Show enough focus and execute. And I think the good news is that there's broad-based agreement on the three measures I mentioned and several others. So if you look at COSATU's economic plan, the Business for South Africa plan, even the ANC's plan, these things receive broad support. So there isn't lots of disagreement on what needs to be done. And COVID kind of gave us that in electricity. We now need execution. And it's not clear how much execution capacity the government has, but the place I'm most optimistic on is actually electricity. There is this coalescing on the need to unbundle Eskom, the need to accelerate the renewables program. And we just need to see the progress now.
Well, there has been a teeny little flicker of light with the Minister Mantashe releasing a request for the procurement, I think, of 2,000 megawatts of electricity. So that is a step forward. What we do know is it will take 2 to 3 years for that electricity to come online, at the very least. In the meantime, we persist through load shedding and other, the economy just drags its heels. So we perhaps need to do more. We need to get the private sector involved, as you say, Nazmeera. And there's so much talk around infrastructure and getting the private sector and the government to work. And there was a great question from one of our listeners, one of our audience just now, who she was asking, I think it was a she, I'm sorry, I've forgotten who it was, who was asking, what are the constraints to business investment? I mean, we've seen private sector capital investment falling off. You spoke about policy uncertainty, but what are the greatest constraints, and how quickly and easily can those be released?
Yeah. So,
Mamokete, do you want to jump in there?
I think Nazmeera actually did speak about them. One of the biggest constraints to growth is actually the availability of electricity, right? Mm-hmm. So, like she said, the first thing you've got to do is sort out the energy issue. And we've got the policy blueprint in place. We just need to press play and accelerate delivery on that side. And I mean, you were talking now about involving the private sector and electricity provision. I just saw a presentation recently that was done by CSIR, and basically arguing that if you allowed own generation, which is another legislative process that needs to be concluded, if you allow own generation, you could actually take care of a big part of the shortfall for this year. But they do argue that come next year, you're still going to run into problems, and 2022 as well. But there are ways in which you can alleviate the problem in the short to medium term before you actually have the delivery of power coming on stream in size in, say, 2022, 2023. So those are that is one thing that you can do. But electricity provision is what we call a binding constraint on growth, and ability to invest, especially in manufacturing, those kinds of sectors that would absorb a lot of labor, is constrained by the availability of electricity. I mean, it affects mining, it affects manufacturing, it affects a lot of sectors in the economy. Having said that, there are sectors that are not as energy intensive, obviously like tourism. You can't talk about it now during COVID, but it should, in theory, unwind at some point in the next 6 to 12 months. So there are certain sectors that you can invest in, but I think we can't run away from this idea that there are binding constraints, and if you take away those constraints, then investment will follow. And Nazmeera also spoke about just generalized inertia in terms of moving on policies, which I don't know if it's a political issue or if it's a capacity issue, across various sectors. And I agree with her on the sort of top three. I would have the top three as well. First thing, energy. Second thing, second thing, all network infrastructure, spectrum, ports, rail, and that's Transnet sort of area. And you can see the overlap between big SOEs and sectors where we need something to happen. So there is a lot of structural constraints that have got to do with also the ownership and the monopoly status of government entities in certain sectors. That has got to be unwound. And I think, you are right, then that becomes a political issue, and so it has to be sorted out in that sphere.
Nazmeera mentioned that. Sorry, Naz?
No, carry on. So sorry.
No, I was going to say, you mentioned just now that COVID has brought us together in many ways, us being government, civil society, business, that there's far more discussion. And there's actually much more overlap in terms of the way forward. But the one area where I don't see overlap, and this is a trend around the world, and our government is particularly susceptible to this, is the hand of the state. And we see it in government's policy documents, and it's there, that the hand of the state is actually bigger than ever. Yet this week we saw all sorts of SOEs coming. The post office has been to Parliament. SABC wants another $1.5 billion. ABSA needs $3.5 billion to maintain activities. We know that Denel has a liquidity crisis. And as for Eskom, I know one of our listeners a minute ago asked, how on earth are we going to deal with Eskom's probably close to 500 billion rands worth of debt? So Naz, how do we change that trend? How do we persuade government that actually, if it gets out of the way, the economy can grow when the rest of the world seems to be heading in a similar direction?
I think there are two different things there. The one is the government's role in running the infrastructure, all the companies you listed. And I think there is movement. So Professor Ramokgopa, who's running the infrastructure office, is very impressive. And there is a full understanding that you need much more in the way of partnerships. Even the ANC economic plan, the COSATU plan, does see a bigger role for collaboration between the private and the public sector. So I think there is progress. The area where I think is more concerning is the regulatory expectations and this idea that the state can regulate the details. And I would hope that if COVID showed us nothing at all, and nothing more than this, it did show us that government's ability to micromanage is non-existent. And that's not a South Africa problem. If you go to many governments around the world that have tried to do this through COVID, they've all been useless at it. Because they don't understand the interlinkages. They don't understand what it means. I mean, for goodness sake, when the Minister of Trade and Industry is putting out regulations on whether or not you can buy open-toed shoes, we've lost the plot a little bit. It's just not happening. So Sasha, I share your concerns on this latter, but I think the former, I'm more hopeful that there has been movement and that financial necessity will force even more movement.
So how do we deal with this intractable problem of state-owned entity debt? Mamokete, we've got these businesses, they are employed, and here I'm treading where angels fear to go once again. You can't just let them fail, surely. That would be the answer of many in government and many in the trade unions, and I can see you smiling at me over this. But surely, I mean, can you let Denel fail? It's got incredible intellectual capacity. It's got IP that is the envy, or used to be the envy, of many around the world. Can we let these SOEs fail, or must we bail them out?
Okay, I think they're not all the same. Not all state-owned entities are the same. I think that's the first place to start. Yeah. And so they shouldn't be treated the same, because they're not the same. Their sectors, what they do, their structures, their problems, etc. And the strategic nature of what they do, of their activities, is not the same for each entity. So I don't think there's a blanket answer for all SOEs. So SAA for me was sell it, just give it to somebody for a rand. She just give it away. As long as it stops costing you money. Maybe you want to do that, because within that sector, it's not clear that you need a public sector player. And looking forward, it's just the money drain, right? So that's the first one. And then the thing is, when you look at the rest of the portfolio of SOEs, there's certain SOEs definitely where you can look at them and say, maybe sell this thing, privatize it, or have private players invest and run the entity with government continuing to hold the stake. And a great example of where that was done was around telecom. So Telkom, you invited the private sector. It was privately run. Vodacom, also government had a big stake in Vodacom. They had a big stake in MTN at some point. And those stakes have really served the fiscus well. And that's the kind of collaboration maybe that you need for SOEs that, like the post office, where if the need is there to have that entity, you can have the private sector involved in that entity. And I suppose the other thing is this idea that the private sector is some evil, monopoly capitalist. The fact that a capitalist is a monopoly is because of government's way of managing or that sector. It's a regulatory issue. Whether you have a monopoly or you don't have a monopoly is up to the state. So whether it's private or it's not private, that's another question. So I mean, to conflate them and create this impression that private sector participation and involvement is inherently regressive, I don't understand that, right? So if you look at Telkom, it's been a much more progressive entity for having been owned by the private sector to some extent. You contribute to the fiscus, etc., instead of it being the other way around, where the fiscus is contributing to that entity. So, when you talk about Denal, so if I look at an entity like Denal, the question is, do you really need it? And most importantly, do you need it at the price? Because the fact that you might want it does not mean you can afford it. So there's also that issue. And when you look at like a Transnet, for instance, in a partnership with a private sector entity, I would expect that you would get quite a lot of value from the asset versus what you're getting now, both for the state as well as for the economy as a whole. I mean, in Transnet's case, we've been talking about road to rail for so very long. It is so obvious. It would make so much sense. It would make network moving goods from one place to the other so much cheaper, so much more efficient. Clearly being run from the state, they are unable to get that mandate done. Maybe in partnership with private sector players, you could get that movie on the road to everybody's benefit. Then you look at, say, an ESCOM, and so on and so forth. So I think each entity has got to be looked at for its own merit, for its place in the economy. And you've got like monopoly capital. At the moment, we've got monopoly states, and they're behaving exactly like monopolies with classic, costs to the economy. So you need to break those monopolies, be they state or non-state, and then the state must keep only that which it can afford for the benefit that they think they get from it strategically. And I think it would be ultimately much better for the rest of society. And also private sector investment and holding of companies, we need to also remember, it's not individuals. It's not Nazmeera going to own 50% of Transnet. It is South African pensioners. It is people like you and I. It is still owned by South Africans only via a private channel versus through the state. So it's not clear to me that there's this evil big brother stock market that's going to hold Transnet, and therefore it'll be owned by the private sector and we must all shoot ourselves. Because Telkom is owned by South Africans. It's not owned by some strange person who has no interest in the country. And I think we need to have the right conversations.
I think you raised so many important points there. So one of our readers, I'm getting it all confused here, listeners today, Greg Snedden, I think he's asking the question that all of us who have such a vested interest in this country and in the economy and in growth are wondering. So we have fantastic plans, we have good policy, but no action. So what will it take for government to act, to actually execute on some of these plans? And Naz, we've got about 6 minutes left, and I still want to ask each of you for a closing comment. So Naz, do you want to tackle that one briefly?
I don't think there's an easy answer to that. Yeah. I think that economic urgency has to play a role. And I think the way the Minister of Finance has posed it is persuasive, I would hope, to the rest of the cabinet, which is currently we're borrowing from the IMF in a rapid finance instrument, which, as Mamokete said, has limited conditionality. If we don't enact reforms, we will be borrowing from a number of multilateral institutions with very onerous conditions where that sovereignty will be lost by default. So if we all agree that unbundling Eskom and rolling out a massive renewables program is a good idea, then let's start doing that instead of talking about doing that. Because what is also in that particular example available is, as the global economy is moving towards a green economy, there's room to try and raise cheaper financing or very developmental financing to take advantage of any transition we do in South Africa. And we've seen that in all the plans. I mean, President Ramaphosa talked about it last year. South Africa wants to do a major carbon transaction. So there are ways that we have. I think the frustrating thing for me is we actually have levers to pull at this point in time in terms of raising the growth rate. So I have a debt sustainability model for the country. And if I plug in a 2% growth rate on the longer term, I mean, we need a nice bounce back next year, but beyond that 2%, it becomes sustainable. 2.5% makes it very sustainable. It's just 2.5% very far away from 0.8%.
Very
2.5% a lot lower than we were running at in the mid 2000s, when we were averaging 4%, getting to 5.5%. So we don't need heroic measures to move back to stable. We just need some action.
Yeah.
I think you've touched on exactly where I want to go, and I want to ask both of you. We're talking about heavy subjects. We're talking about debt. We're talking about economic stagnation, but it's spring. So I would love for both of you to give me 2 or 3 points that we can take as hopeful, to give us hope that actually South Africa will find that spring, that we can renew growth, to find that 2.5%. And what we've seen happening and unfolding over the last couple of weeks isn't all bad. So what have we seen happening? And I'm going to start with you, Mamokete. What is positive? What are the 2 or 3 positives that we've seen and we can take away?
So, I'm very much a South Africa bull. So medium term, I think it's going to be rocky. There's a lot of pitfalls. It's going to be quite risky. But I think beyond that, South Africa is structurally a really good story if you pull the right levers. And if I think about what's happened, say recently, I think we started talking about the NEC. I think that what's happening, like Zondo, the NEC, etc. So I'm one of those people who thinks you don't have to get corruption at zero in order for the economy to grow and for the country to be functional. But you need to reduce the endemic corruption, and it has to not cost you a whole project. So you can still grow even with certain levels of corruption, like a lot of medium income countries. So if I look at what has happened now recently, it's that, you're moving towards a place where there is an understanding being created in the political economy that there is a certain level of rampant corruption that is not acceptable. And I think that's a very good thing. And also more than that, I think when South Africans started being very noisy about corruption, you could see that alignment emerging between the political economy, between what citizens want and what politicians are willing to do. And that's a very strong signal, because when you start to think about what's going to happen with the coming elections, it becomes more and more important for politicians to do what is the right thing for South Africans, not just around corruption, but around economic policy, etc. Because there's an understanding that you can't afford another recession. If you have another recession, then the people will hold you accountable. And that alignment, I think, is critical. And I think that's what's been missing in South Africa for the past, say, 15 years, where politicians knew, you could do whatever you wanted, people are going to vote a particular way. But now from one election to the next, you can see the pressure starting to emerge. And that forces that alignment. That means that policy is now going to at least be somewhat beneficial for the average South African and the average voter.
Mamokete, I'm going to interrupt you right there because we have literally 10 seconds left. I'm going to take Nazmeera's previous comments about 2.5% we can get there as a positive comment, because we are all out of time. I have to say thank you to you lovely ladies for being with me for the last hour, and thank you to our audience who have been very chatty and very involved and very engaged. And I'd love to have more time, but we're out of time. So thank you. Bye-bye.